Hello, I'm Matt Schwartz with Schwartz Insurance Group in Louisville, Kentucky, here with another in our video education series focused on employee benefits. The purpose of our series is to teach you about the basics of healthcare reform and other benefit concepts, to share the latest ideas and tactics that employers are using to be successful, and finally to position you to be a pro with regard to your benefits, communication, and culture. One of the most visible features of the new healthcare law is what was being called the healthcare exchanges, federal exchanges, now really known as marketplaces. So I want to talk about those because those were first established back or made effective. People could join as of January 1st of 2014. And there were some hiccups. We heard about healthcare.gov that didn't work initially, and there were some delays. Now that we're moving towards 2015 open enrollment, I want to share some basics about what the marketplaces are and maybe some insights that we've learned in the past year. So first of all, an exchange really is simply a place that you can shop for and purchase health insurance. It was designed essentially to help insurance companies compete against each other and lower prices. And so let's talk about who can access those. Really, just about anybody can go to an exchange. There's actually two pieces to the puzzle. One is the individual exchange, and that's, again, virtually anyone can go to those exchanges. There are some exceptions, but it doesn't matter whether you have insurance, whether you don't have insurance, whether you have access to it through work. It doesn't matter. Anybody can go shop on that exchange and even purchase coverage. You then have what's called the SHOP, Small Business Health Options Program, and that is for small businesses, really those under 50 employees. And I'm not going to dig deep on that, but in essence, the folks that would want to go to that are really very small businesses, typically under 10, 15 employees who have low incomes, because you get tax subsidies towards the purchase of insurance through the group that way. But let's focus our attention mainly on the individual side, and let's talk about what is available. So you have really a lot of the same carriers that have been available in the open market chose to participate in the federal exchanges or the state-based exchanges. Now, a lot of times those carriers did put in a little bit different products. They were designed, they had to be platinum, gold, silver, bronze level. And platinum being 90% of all claims that could come up in a year are covered. It's called the 90th percentile. It's an actuarial value. Gold being 80%, silver being 70%, bronze being 60%. So there were some minimums or some standards that the government set in terms of what had to be covered. And when these are accessible is actually a limited period of time. You actually can only access these during open enrollment, which this year is going to run from November 15th, 2014 through February 15th, 2015. It's really the only time that you can go out and buy insurance. And if you think about, because there's no pre-existing limits, because there's no medical underwriting, there's no declinations, everybody that applies is going to be accepted at the rate that's given. That's why you have these open enrollment periods. The only exceptions to that are going to be specific qualified events, so meaning a loss of other coverage. Why would somebody go to the exchange? Number one, a lot of people are curious. I mean, they'll go through and they want to find out, do I qualify for a tax subsidy? And interestingly, I'll go ahead and add at this point, there was an option at the beginning of when healthcare reform passed. States could expand Medicaid. So Medicaid is the insurance program from the government that covers low-income folks. It generally covered folks under the federal poverty level, which this year is about $11,000. So what happened is when the expansion happened, it raised that limit to the 133% of federal poverty level, which means about $14,600. And so that for a single person with no dependents. So in essence, a lot of folks that went on the exchanges and purchased coverage were through the Medicaid expansion in those states that did. So Kentucky was an example. Out of 430,000 folks approximately, 330 were Medicaid expansion. The other 80 or 90,000 were just individuals that went out and purchased. So why would somebody go on the exchange to purchase? Again, if you're a lower income person, you may qualify for tax subsidies, so that if the normal premium is $300 or $400, you may only pay $250 or $75 or $25, depending on how low the income is. There's tax subsidies available. So there's definitely reasons that people will go. There are some small employers that are looking at that very seriously. If they're not going to be penalized and they can put their low-income employees through that exchange, there's definitely some times that it can make sense. That's one of the examples where a little bit of advice, a little bit of understanding about how that law works can be really helpful in making decisions. If we can be of any help to you, let us know. And if you have suggestions on future topics that we're covering here in this series, please let us know. Again, I'm Matt Schwartz with Schwartz Insurance Group in Louisville, Kentucky. Look for the next in our video education series focused on employee benefits. And you too can be a pro with regard to your benefits, communication, and culture. Thank you.